Hi everyone, the title of this video is the flow of cost in a job costing system. So this part of the syllabus, it is important in order for you to be able to eventually do good documentation when you do job costing, and also being able to calculate the profit when you sell product or provide services using the basis of job costing system. The flow of cost information in a job order costing is summarized as presented in the slides. So you start with work in process inventory, finished goods inventory, and when you want to sell, it becomes cost of goods sold. So basically in this video, you would have some understanding on the link between cost, balance sheet and income statement information, double entry recording, the preparation of schedule of cost of goods manufactured, as well as the schedule of cost of goods sold. Again, this is also an illustration between the link that exists between cost information, balance sheet information and income statement information. So as you can see here, we have two types of costs. One is product cost. Product cost would be your raw material, direct labor and manufacturing overhead. And we also have period cost, your selling and admin cost. So once you have incurred the product cost and it becomes the product, okay, it will be known as finished goods inventory. When it was halfway done, it is known as work in process inventory, and the raw material is known as raw material inventory. So these three types of product or goods at the end of the year, it will be reflected in the balance sheet. Okay, once you sell your finished goods, it will be documented as cost of goods sold under income statement. As for the period costs, for example, selling and admin costs, they are part of expenses and would be put under income statement. So let's look at the first item, raw material. So raw material that you purchase, let's say by credit for production, will be recorded in the raw material inventory account. So you debit raw material inventory account, you credit accounts payable. So when you use the raw material in the production, you will record in the work in process inventory account. So you debit work in process inventory account and you credit your raw material inventory account. At the end of the financial year, the balance in the raw material inventory account is reflected in the balance sheet under asset. Next is your direct labor. The direct labor cost involved in production will be recorded in the work in process inventory account. So you debit work in process inventory account and you credit your salary payable account. The third one is your manufacturing overhead. So the recording of manufacturing overhead is a little bit more complicated as it involves two types of recording. First is the recording of the actual amount and the other one is the recording of the applied amount, both referring to manufacturing overhead account. The actual amount incurred for manufacturing overhead is recorded as debit manufacturing overhead account, credit accounts payable. So the accounts payable here refers to any specific overhead accounts. The applied amount of manufacturing overhead is recorded as debit work in process inventory account and credit manufacturing overhead account. So what do you understand by work in process inventory? Work in process inventory consists of goods that are partially completed. At the end of the financial year, the balance brought forward in the work in process inventory is reflected in the balance sheet under asset. Once the goods are completed, they will be sent into the store and identified as finished goods. Here, the recording will be debit finished goods inventory account and credit work in process inventory account. At the end of the financial year, the balance in the finished goods inventory account is reflected in the balance sheet under asset. So once you have your finished goods and you want to sell them, okay, what happen is you will document it as cost of goods sold when you sell your finished goods. So the cost of goods sold refers to the finished goods value that are being sold to the customers. When sales of goods happen, its cost amount, referring to cost of goods sold, is reflected in the income statement. Here, the recording will be debit cost of goods sold, credit finished goods inventory. The balancing amount in the cost of goods sold account would be sent to income statement. Other selling and admin expenses are also included in the income statement, just like I mentioned during the first two slides previously. So here we have the cost of goods manufactured schedule. So do take note of the items in the cost of goods manufactured schedule. You have direct material, direct labor, and manufacturing overhead applied. Okay, you have the total manufacturing cost. At the end of the day, you would know the cost of goods manufactured. The next schedule that you need to understand and also being able to prepare is the cost of goods sold schedule. So you have your finished good inventory beginning plus cost of goods manufactured, and then you have your cost of goods available for sale. You deduct your ending finished goods inventory and you add the adjustment. So you have the adjusted cost of goods sold. So for both schedule, do take note of the format and also the items in both schedules. That's all for this video. Thank you very much.